Well, let's take a look at our grain trade in this segment here, and then we want to welcome some expert help from Brian Hoops in a moment. On the corn board right now in Chicago, we are maintaining this lower stance that we have had pretty much all day long. And July corn down 5 1/4. We're at 328 1/2. We are off of our overnight high by about a nickel. We have December corn at 343. That is down 4.5 cents right now. Well, with the soybean quotes provided by bar chart, we have July down 5 at 859 3/4, and November down 4 3/4 at 873 1/4. And we have just bearishness kind of all around here in the grain segment. We have July Chicago wheat, for example, down 8 1/4 cents. We're now at 503 1/4, and that's almost 11 cents off of our overnight high there. In the Kansas City hard red wheat, winter wheat, we have the July contract down 4 3/4 at 455 3/4. That's significantly off of its overnight high by about 8 cents. Minneapolis wheat is currently trading July at 522 1/2. It's actually coming back a little bit from its low, and now down just 1 3/4 cents on the day right now. The cotton market has been weaker, and July is still down 52 points at 60.29 per pound. And canola, wanted to check on that as well. We're $2.10 higher on July, and that puts the price at $4.67 even per metric ton. This is in Canadian currency, $467 per metric ton. All right, let's bring in Brian Hoops here and sort this all out. Brian, we have the WASDE report coming out a little later on this week. That will include crop production numbers. It will also include some ending stocks estimates. And for one thing, I wanted to point out, if we look at the U.S. ending stocks for the 2020 and 2021 marketing year, that'll be the one for the new crop that's now being planted right here. The trade is looking for soybeans to be showing ending stocks at 459 million tons. So talk to me about this. Or actually bushels, I'm sorry, 459 million bushels for carryout. Some analysts I have heard from, Brian, have said that they think that if there's any weather problems at all, that could be significantly less than that. And it used to be that 400 million bushel threshold was a pretty stout threshold that meant either sharply higher markets or not. How do you feel about that?
Yeah, you know, the 429 to 449, 59, kind of in that range. It depends on which news wire you're looking at. They have some estimates. You know, typically that's a pretty big ending stocks number. That's a large cushion that the market has had to deal with the last couple of years. In fact, if we had, you know, in the 450 million bushel range, that would be the second or third largest carryover number that we've ever had in history. So you're looking at a market that's kind of on this threshold that if we have this big crop that the market's assuming, almost a 50 bushel per acre yield, production at 4.1 billion bushels, if we have that type of yield, this type of stocks, we're probably going to see lower prices into harvest, but you're kind of on that threshold if we start curtailing the yield because the market's already dialed in a big yield, you can see prices move much higher. You know, China is thought to be buying a lot of product in that October, November timeframe. They've made some sales purchases over the last 2 weeks, and that's because they're a little bit short bought in that new crop marketing year. That's when a lot of their purchases are going to come, and of course that's going to be very strong underlying support for this market, and probably keep prices in a trading range, at least until we can determine August weather and look at this crop size. If we're going to have a 50 bushel per acre yield or 52, or if we're going to fall significantly from that and produce something less than what the market's factored in right now.
Yeah, it's going to be hard to have a perfect growing season, that's for sure, and it hardly ever happens. So we'll have to see what these numbers are from USDA. That report comes out Thursday at noon Eastern time. We'll have full coverage right here. We'll come back and talk more with Brian Hoops about our livestock trade right after this. Let's check out our live cattle board right now and see what the prices are doing. Currently, we have the nearby June up 87, the August 30 higher now, and now 35 higher at 96.67. So we're off our earlier low by nearly $1 and a dime. Brian Hoops is our guest. Brian, have you heard of any cash cattle market activity yet today?
Yeah, Marlon, nothing to report as far as the cash markets. It's pretty quiet. The trade is hoping we'll have at least steady with a week ago. Despite the plunging box beef values, we're seeing a lot of intermarket spreading, with June gaining against the rest of the contracts now that we're into the delivery period.
Good point. All right, now let's look at the feeder cattle trade. Currently on feeders, we have the August unchanged at 133.07, September up 12 at 134.65, but steady to higher across the board. Meanwhile, on the lean hogs today, mainly lower, June down 55. Your active July contract 42 lower at 53.55 per hundredweight. Brian, thanks for the time today. Always good to visit with you. Brian Hoops of Midwest Market Solutions with a look at our markets at midday there, Christina.